Hello, hello. Welcome back to Alpha Beta Soup, where we unpack Bitcoin using on-chain analysis. I'm TXMC. I hope everyone had a great weekend. In today's video, we'll hop around and see what happened on October 1st. There are a couple of small events that were of interest there. We'll also take a few looks at long-term holder profitability and how we can use that to gauge the current market cycle. If you're enjoying the content, please give this video a thumbs up. And don't forget to subscribe. If you enable the bell icon next to the subscribe button, you'll be alerted to all my new videos the minute they come out. Your support means a lot to this channel's development. With that said, let's get right into it. Where we'll start today is on the price chart for Bitcoin. Coming into the end of September, we had several sideways and red days, some chop, and there was some uncertainty about what the fourth quarter would hold for us. Well, we woke up on the morning of October 1st to a big fat 9% green candle, which is certainly the way that we want to start the fourth quarter. The fourth quarter has historically been a very bullish time period for Bitcoin. Almost every major cycle has ended in the fourth quarter of that year. So there's a lot of expectation that we might see the same kind of pattern this year. I'm not yet sold on that narrative. I think a lot has changed in the Bitcoin market in the last year or two that might mean that this current market behaves differently from previous cycles, but that is not yet proven, so I'm open-minded to the fact that it may behave as it has before. The start of October being very strong is certainly a good sign for that to be true. We'll check out the weekly chart here quickly. In my last video, I mentioned how this looked like a bull flag, and we were waiting for the bounce up where the target would be the highs. Well, we got the first candle to make a new high right here. Is that going to resolve? I don't know. But in trading, this is a valid setup, and so people could be watching that. Either way, we did get a first high candle here after the pullback, so all systems go until this gets invalidated. But one thing I do want to mention is part of what spurred this rally here on October 1st. Here we're looking at futures short liquidations on the hourly chart for the last couple months. A short liquidation occurs when a trader in the futures market places a bet on price to go down and the price goes against them. It goes up. And as a result, their position ends up getting liquidated when the margin requirement exceeds their cost. When the amount of money they need in their account is more than they have, the exchange will automatically close their position, and we get a liquidation print on this chart. Here, in this hour on October 1st, in the 10 a.m. hour UTC, there was $47 million of short liquidations that really helped spur the rally. If you look, let me zoom in. If you look at this bar, it's right here on the move up. This really helped add fuel to the fire, and if we zoom out, this was the highest single hour of short liquidations since August 13th, way back here. And this helped result in a much larger move than this small print here on October 13th, or August 13th. Just something to keep in mind, something interesting to look at. Despite the liquidation, we did not seem to have any discouragement in futures activity. Volume has actually been going up a bit in futures, so that didn't really shake anybody out. And if we look, zoom this out to where we are level-wise, we're still on the high end. I think that derivatives volume, high derivatives volume, is probably here to stay. There are new products coming out all the time, and this market continues to become more sophisticated. And I don't see a future where there is not a bustling derivatives market alongside Bitcoin's spot market. I think we as analysts, myself and my colleagues, we need to get better at spotting potential flushes before they get here, and that's part of the development of the science. We'll quickly look at the funding rate here to cap off our peak at the futures market, and you can see while we have seen a few green prints, the funding is still very low relative to where it has been most of the year, including back here in September when we had these flush outs. You can see funding was considerably higher. So we need to watch this in the coming days, make sure this doesn't start getting up into, more dangerous territory. Here is the spent volume age bands. This is the volume of spent coins every day broken up by the age of those coins. And here it is filtered to only show coins 6 months or older. We consider these older hands, more sophisticated investors, people who have definitely weathered a series of negative events this year and have held strong. People who bought 6 months ago got their coins in April, early April. We're talking right over here. And these people have held through all of of this. We're seeing their spending volume is very low. If you look back here, I'll zoom out even more. If you look back here during the bull run, you see this big wall of print down here. This is really what old hand volume looks like when it's elevated, when smart money is trying to seek exit liquidity into market strength, realize profits, and reset themselves for the next market. This is what that looks like on the spent volume age bands. And if you look over here, it is very empty. We have a couple of small spikes, but by and large, in percent of daily volume, we're still well in the 1% or lower range. So no concern here yet in the perspective of old hand selling. Here is another perspective of the smart money. We've looked at this chart a few different times, but I've actually merged long-term holder supply into this so that we can see a few of these metrics together. So what we're looking at here, the orange line is the balance of whale entities. So these are individuals on chain that have at least 1,000 Bitcoin. I've taken out exchanges, so they're not in here. What's left are smaller institutions, smaller firms, high net worth individuals, and some private companies. When we look at the whale balance, and we've covered this in a previous video, I'll leave a link in the description where we break down the previous market top and the profile that it had. But for a refresher, we can see that the whales here, they really began distributing as price, that's price here in the black line, as price began to break back over this 40K top that it hit in January. It pulled back and it came back up this way. That is when whales really started selling, and they distributed consistently until the summer months. And here it really began to flatten out. And then here, as we got the bounce off the B-word conference in late July, we really saw whale balances tick up here. Someone new entered the ring. And since then, we've seen some increases in this group's supply. And lately, there's been a slight distribution. I zoomed in too much there. Sorry about that. Lately, we've seen a slight distribution of this group. It isn't a lot of coin, but it's something that I want to look at regularly so that we don't see any surprises from this group. Right now, they do appear to be in net accumulation. A bit of distribution is not a concern. You can see they did that in August here, and they did that through the summer very gently. As long as this group is holding up, this is a relatively small group of investors. There aren't that many people with 1,000 Bitcoin. So when one or two of them makes a move, it really shows up here. And the fact that we're seeing this continue to trend upward is okay for now. That's positive. The other lines on here, the green line is our long-term holder supply. Long-term holders are people who bought coins 155 days ago and have not sold. We watch long-term holder supply regularly because it can be seen as a weather vane for larger market conditions. Long-term holders buy in bear markets and accumulate, and then as price breaks the previous high, they begin to distribute into market strength. By the time that a market has reached its top and price begins to roll over, long-term holders are in accumulation mode. We're continuing to watch this group's holdings increase. Today's long-term holders bought on May 2nd. Zoom in here. Where is May 2nd on the chart? Right here. They bought right here, right before the flush. And the fact that their supply is still going up means that these people who bought right here, right before a 50% correction, they held strong. They are who is left in this market, and these are the people that I want to be investing with. These are the people who set the floor for Bitcoin. And so far, they have not begun to sell. This blue line here is our illiquid supply shock ratio. This is the ratio of coins that live with strong hands, with entities that are statistically unlikely to sell, compared to the amount of coins held by more fluid, more liquid entities. So when this line goes up, that means that supply is being absorbed by entities on chain that do not have a high history of selling. They tend to hold their coins the majority of the time. We like to see this value going up because it shows a restriction of the available supply for future buyers. The more supply gets locked up by long-term hands who have a low history of selling, the less coins are available for new market entrants, which creates a supply squeeze dynamic. Now, higher prices could ultimately unlock more supply. Some of these strong hands may decide to start realizing gains if price gets high enough for them, if it becomes juicy enough for them. The factor that is most important in that dynamic, because we expect some selling at some point, the factor that is most important is whether that sell pressure outweighs the demand at the time. If the sell pressure comes in too early and casual retail hasn't arrived yet, we may start to see imminent imminent price weakness and we might not reach our ultimate finish line. I don't have confidence that that will be what happens. Long-term holders tend to be smart money. Illiquid supply holders tend to stay illiquid, at least in the recent history for Bitcoin. We will continue to watch these levels closely. I don't want to see whale balances turning over. I don't want to see long-term holder supply turning over. And I don't want to see illiquid supply turning over. I'd like all three of these to maintain a similar trend until price starts to get back up into the 60Ks and we notice daily layer 1 base chain demand volume increasing. A note on that activity, here are active entities and entity adjusted transaction counts. So the blue line here are the amount of individual participants on chain every day, and the orange line is the amount of transactions they participated in with other investors. So self-dealing and internal transfers are filtered out of this orange line. So you only get economically meaningful transactions. And we can see both of them are continuing their uptrend from the July low, as we have touched on. There was a bit of a bottom here at the end of September, and we have since spiked upwards. I'd like to see this trend continue, friends. This is what we want. Increased entities, increased transactions. This chart here is entity adjusted transfer volume, where on the previous chart, we're looking at the count of transactions performed by entities on chain. Here is the dollar value of the total volume of those transactions. Let's zoom in here. We'll apply a 7-day moving average so that we smooth it out here. And look at this. Look at this spike of transfer volume. Now, there's a couple of things to take away from this. Entity adjustment means that this does not include self-dealing. So as entities, individuals are recognized by the Glassnode clustering algorithms. It starts to filter out any kind of activity where those people are moving coins amongst their own wallets. So we shouldn't see anything like that here. Another factor that I think is important to remember when we see these big spikes is that Glassnode is still working on identifying the FTX exchange and how they manage their coins. FTX has been rumored to have some very weird coin management processes that create very large volume prints on chain. And while the Glassnode team continues to work those out, they've been printing some wild values on some of these volume charts. However, it's been a couple of weeks now, and I believe that some of this activity, some of this is likely not FTX. We may see in the coming days, and maybe in the next week or two, as Glassnode finalizes what they're doing with FTX's exchange activity. Once they figure all of that out, we might start to see this value adjust a bit. That's something that happens with entity metrics. As the algorithms become more intelligent, they occasionally will adjust data. So it's important to let them bake in for a few days before we react too heavily to new prints, new trends. But the fact that this has elevated and remained elevated for a period of days, a couple of weeks, is very promising. I'd like to see this stay up here. That is extremely encouraging. This is the same chart, but with relative size included. So where this is the USD dollar value of total transfer volume between entities, this is the relative breakdown of their size in dollar amounts. There's something I want to show here. This blue area on the chart is showing you the relative amount of transfer volume per day that is taken up by transactions that are over $10 million. And if you can see here, that is what we've been dominated by in the last couple of weeks. Very large transactions are making their way into the mempool. $10 million plus transactions. These are institutional level moves. I'd like to see a lot more of this. Again, I don't know how much of it is FTX, so I'm not getting too excited. That's why you haven't seen me tweet anything out about this in the last few days. I'm watching this closely. If it stays like this, that is an extremely bullish factor adding on to this kindling of a possible double pump bull market that we've been talking about for the last few weeks. This supply squeeze narrative will gain extra fuel if we see that there are suddenly institutional level flows making their way around the mempool. Just something to keep in mind as we're going forward. This chart is showing the long-term holder profit and loss ratio. I posted this on Twitter over the weekend and got a lot of questions about it, so I want to take a couple of moments here and break it down. This orange line is simply the ratio between long-term holder supply and profit and long-term holder supply and loss. I've put it on a logarithmic scale so that you can see the changes. Look, if I put it on linear, you can barely see anything there. If I put it on logarithmic, you can really see the shift in profitability here. The reason I made this chart, the reason I wanted to show people this chart is because it does a good job of demonstrating how long-term holders fall out of profit on the backside of bull runs and go into heavy accumulation. If you were to only look at long-term holders through this lens and you didn't understand that they buy when the price breaks the previous high, that they sell into market strength, and by the time price rolls over, they begin accumulating again. If you didn't understand any of those dynamics, you were to only use this chart, you could simply look for long-term holders to reach maximum profitability and then fall back down into this accumulation zone as a way to identify when macro market cycles have shifted. If you follow these spikes, they're always at bull market tops. And this makes sense. The highest prices produce the highest profit ratio. That is a logical relationship between these two metrics. The importance here is how it demonstrates the fall off of profitability. We have the spike up, they distribute, and then it doesn't take long for profitability to precipitously fall back down into this kind of resting area down here. When that happens, you can bet that long-term holders are accumulating and the fervor and euphoria of the bull run has passed for the time being. One of the questions I got this weekend about this chart is whether I think this over here means we're about to enter a multi-year bear market. I think people see this 2017 and 2018 cycle, they see these two arcs right here, and they assume that every market needs to do this same exact thing. And I am not convinced of that outcome. I personally believe that this market here more strongly resembles this on a longer time scale. Now, 2 videos ago, I introduced you to a metric called the R-HODL ratio, the realized HODL ratio. I'll leave a link to that in the description. I highly recommend you go check that out. That metric, along with several others that we've broken down, but that one specifically, really emphasizes this theory that I have that our current market resembles the 2013-2014 double pump bull run, but on a longer time scale. This is a much larger market, but the footprint on chain strongly resembles a capitulative bear market that we had here in the summer that was very swiftly bought up, that sent us quickly back into heavy accumulation, more quickly than in previous markets, I would say. I believe that this profile here is a bigger version of this here, and that we are preparing for another push up in profitability, in price, and then eventually in long-term holder distribution at new highs. So when you see this chart here, this long-term holder profit and loss ratio, I don't want you to think there's some kind of voodoo going on here where it's going to perfectly tell you where the top of the market is. It probably won't do that, but it can get very close if you simply watch their profit dynamic. If you see how swiftly it falls off here at the end of every market cycle, it falls off back down below this lower level. When it falls back down here, long-term holders are no longer realizing profits. Remember, this group is the smart money. If there aren't profits to be realized, they historically tend not to sell. They would rather hold because this asset is a store of value, and this group of investors has a low time preference. They have a long-term vision for their participation in the Bitcoin market. And when their profitability falls off, they just wait for the next cycle. Over the weekend, I shared another chart that showed long-term holder profitability. And here it is. This is the supply of long-term holders, and the color of the line shows when they are in or out of 250% profit. I noticed by playing around with this that long-term holders tended to start distributing when they reached 250% profit. I don't know why that is. Maybe it's just a bit over 2x, and as an aggregate group, 2 times your cost basis sounds pretty good. But you'll notice here, when the line turns green, long-term holders are in 250% profit. Their MVRV, the long-term holder MVRV, is at 2.5, which means that the market value is 2.5, the realized value, the cost basis for long-term holders. When this line is red, it's below 250%. Doesn't mean that they're in loss, it just means they're not in 2.5 times profit. Notice every time they get into 2.5 times profit, the line starts going down. And they distributed for a while here, and then we get into the bear market and it turns red again. They accumulate, they accumulate, they accumulate. It turns green. They're in 250% profit. They start selling. In the bear market, they start accumulating. It flips back to red. It's red for a long time. There's a little bit of green here, but you can ignore that. And then over here, look, it turns into 250% profit, and slightly before that, they start to sell. But it's pretty much then. And they distribute, and they distribute, and then they start accumulating again. So that's pretty cool. I think that's pretty interesting. It lets us see their profitability. But also, I've added another wrinkle here. So the thickness of the line is the ratio of long-term holder to short-term holder. So there are two groups, right? We've got long-term and short-term, and they make up the total supply between the two of them. When you make a ratio of the two, it shows you the dominance of one group over the other. When this line is very thick, it means that long-term holders are an outsized portion of the supply compared to short-term holders. The ratio is larger. Notice how in the bear markets, this line gets really thick. The ratio of long-term holders to short-term gets very large because short-term hands have been mostly squeezed out, and the majority of the supply ends up remaining dormant by strong hands for extended periods of time. And as they continue to stack and accumulate, that group just grows more and more a share of the supply. In distribution, you can notice the line thinning out. You see that? You see how it gets thinner and thinner until it hits the bottom here? And then as it begins to turn around, it gets thicker. In the bear market, it's at its thickest point. Well, look over here. Look at this recent distribution phase for long-term holders. And note how thick the line is. Note how heavy it remains. They did distribute, but they also retained a large portion of the current supply. At their lowest point, they still were a 2-to-1 ratio in coins owned compared to short-term hands. In the previous bull market in 2018, they were at a 1.3 ratio, 1.3 long-term holder coins to 1 short-term holder coin. That's almost an even ratio. But that never was achieved over here. Long-term holders retained their dominance and they distributed less of their coins. Now, part of this could be because we've reached higher prices. Higher prices mean you don't have to sell as many coin in order to make some profit. That makes logical sense. But we're talking about millions of investors. They don't all have coins from 2017. What I interpret this to mean is that the long-term holder group as a whole is becoming less prone to selling. They're less interested in dumping their holdings and waiting for another entry point. There are always going to be profit takers. There will always be people who let go a few coins to make some money as a way of paying themselves for all the years of anguish they sat through in the bear market. But the key takeaway for me is that long-term holders have retained a large portion of the supply during this bull run, and their profitability rating has remained above 2.5. Note the line has stayed green. Over here in 2018, they were already back below 2.5 profit as they were accumulating out of the bear market. Over here, they're still well in the green, and they kept their coins. They kept their coins after a 50% correction, after China banned industrial mining and over half the hash rate came offline. Tesla stopped accepting Bitcoin as payment and made the whole world scared about its energy consumption. The United States has gone back and forth on possibly outright banning fiat on-ramps to the crypto market. Bitcoin would be affected by that. These people held through all of that crap. Not only did they hold, but they stayed in profit, and they have now grown an even larger percentage of the supply. This line is thickening out as they reach all-time highs. It's getting harder and harder to make a proper bear case, folks. You know, when I look over here at 2013 and 2014, this is the market that I have been saying we look like, but on a longer time scale. And lo and behold, the profitability stayed green throughout this run, just like it did here. I know this is a small sample size. We only really have 3 markets that we can look at this data from in a proper way. I took out 2011 because it just had some weird anomalies. So really, these are the only markets we can look at it in this way. It doesn't give you enough of a sample size that you can say, this is for sure this. But when the only 2 things we can compare the market to are 2017 and 2013, I'm saying it looks more like this. This is the last chart I want to check out today, and it's a different perspective of what we were just looking at. So this is showing you long-term holder supply with their profitability as the color and the thickness of the line as their dominance of the supply. And we mentioned that the profitability threshold for green or red is 2.5 times, 250% profit. Over here, these 4 fractals down here at the bottom are the 30-day change in long-term holder supply once it reaches 2.5 profitability. So once long-term holders reach the level that we say they're in profit enough to want to sell, what happens to long-term holder supply after that moment? Here in 2011, which I took off of the previous chart, but it's left on here, you can see once they reached profitability, they started to sell. This line here is break even. So blue values above means long-term holder is growing. Values below means long-term holder supply is shrinking. They're distributing to short-term hands. So here they hit profitability, they immediately start selling. And then they reach a base and low, and then they bounce back up out of it, right? Same thing over here in January 2013. They reach 250%, they sell, and then the market shoots them back up into profit. They sell again, and then it brings them back up into profit. That's this double wave here. In 2017, they hit 250% profit right around the same time they began selling. I mean, it was like pinpoint accurate. The moment it happened, they started selling. There's some loss, a little bit of gain, some loss, and then after that, they bounced back up. And you can see this took a period of months to play out. Look at the bounce over here. Notice how all of these troughs are pretty dramatic. This one, in this case, there's 2 of them, and each of them get down to about a 10% reduction over 30 days in long-term holder supply. In the current market, they only reached 6.4%. Look at this bounce. Look how tiny it is compared to all of these others. Look how insignificant this little bounce is. And they're already right back up into the blue. They're already growing their stack again, and they're flagging with what looks like maybe another little leg up here. This is interesting. This is showing you just how little distribution went on up here and how quickly they reversed back into accumulation mode. That's really the main takeaway here, is to compare the brevity of this fractal, how shallow it is with every previous distribution event for long-term holders. 2011, 2013, 2017, all very different and much more protracted than this one. If we get another leg up, this fractal will produce another down wave, and then it'll bounce up again. We'll get this kind of zigzag like we had here. But still, the initial distribution by long-term holders was nothing compared to previous markets. Could that be a byproduct of higher prices? To a degree, yes, but it doesn't explain it in full. My takeaway from this is that long-term holders don't see as much reason to sell, and many more of them than in the past are now of a hodler mindset. If this trend continues, it becomes more and more likely that our supply squeeze thesis has legs and that we will see it manifest over the coming months. As always, we will test this thesis with new data each day and make sure that we are not letting our biases cloud our analysis of reality. All right, that's what I wanted to talk about today. I wanted to show you that long-term holders did not distribute as much as they previously have in this spring bull run, and they now have resumed their dominance of the total supply while remaining very profitable. That speaks to a growing confidence in the investor class, and it continues to give confidence to our supply squeeze thesis that we've been building since day one of this channel. Please leave feedback in the comments if you have any suggestions for how I could improve this channel, and be sure to ask any questions you might have about the topics we covered if I didn't explain them clearly enough for you. I'm really enjoying making these videos for you, and I appreciate greatly just how supportive you've been as a community. You guys leave tons of great comments, and the feedback has been beyond positive. Make sure you follow me on Twitter at TXMCTrades. I post a lot of observations, and you'll find out about other content I'm putting out that isn't on the YouTube channel. The beginning of the fourth quarter is looking positive, friends. We have a lot of momentum on our side. Volume seems to be picking up, and all of the strong hands remain strong. Until we speak again, take care of yourself, friends. Be kind to one another. We will speak again very soon. Cheers.